Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two strong buy gold mining stocks plus a couple top gold mining ETFs. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're talking gold. Now the precious metal has been on a rally this past year, and many believe that low interest rates will continue to be a catalyst for gold going into 2025. Some analysts are even predicting it'll hit $3,000. So today we're taking a look at gold mining companies that come in with a strong buy consensus from analysts, plus a couple popular gold mining ETFs to give you some great diversification into the industry. We're going to take a look at these companies, what it is that they do, and of course what Wall Street analysts are predicting for the stock's future. Just before we get into that, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also download the TipRanks mobile app to follow along with these stocks by following the links in the description down below or heading on over to the TipRanks website. Now let's get right into our two strong buy gold stocks. First up, we're taking a look at Alamos Gold. They trade under the ticker AGI, currently priced at $19.42. Over the past year, the stock has gained 37%, and in the last 3 months is up just over 7%. They do currently score a 10 out of 10 on the TipRanks Smart Score. Alamos is a Canada-based company involved in the exploration, mining, and extraction of precious metals, primarily gold. They currently produce from 3 operations, 2 in Canada and 1 in Mexico, and they have a strong portfolio of development stage projects in both Canada and also Turkey. For 2024, the company is anticipating to produce 550 to 590,000 ounces of gold. They shared their latest quarterly report on November 6, and results were mixed, with a miss on earnings but a revenue beat. During the quarter, the company did see a number of financial and operational records. They reported Q3 earnings per share of 19 cents, falling 2 cents short of analyst expectations, while revenue of $360.9 million grew 40% year over year and beat by over $1.2 million. The companies increased their near-term production rate by approximately 20% and produced a record 152,000 ounces of gold. And just a couple of days ago, an analyst from National Bank upgraded their rating on Alamos Gold to a buy, saying that they're well positioned to meet their fiscal year guidance and they expect further share price benefits from several material catalysts due out over the next few months. The stock's outperformance has been driven by a combination of the company's strong track record of hitting guidance and positive updates, which have seen reserves being more than replaced for 5 consecutive years, and they expect this trend to continue into 2025. With 9 current analyst ratings, Alamos Gold is rated a unanimous strong buy, and the average price target of $25.45 implies an upside potential of over 30%. Looking at those ratings down below, we can see quite a few analysts increasing their price targets over the last couple of months. Our high-end price target is this $28, which has an upside of over 46%, while our low-end price target is $20 with an upside of 8%. And for our second strong buy gold mining stock, we're taking a look at Agnico Eagle. They trade under the ticker AEM, currently priced at $84.46. Year to date, their stock has climbed 57%, and in the last 3 months is up just over 10%. They currently score an 8 out of 10 on the TipRanks Smart Score. Agnico Eagle is another Canadian-based gold mining company, and they are the 3rd largest gold producer in the world. Founded back in 1957, the company produces precious metals from operations in Canada, Australia, Finland, and Mexico, and has a pipeline of high-quality exploration and development projects within these countries, as well as the United States. In 2023, the company produced approximately 3.4 million ounces of gold, which did increase over 6% year over year. And they've been paying out a dividend every single year since 1983. With a current quarterly dividend of about 40 cents per share for a dividend yield of 1.86%. They shared their third quarter earnings at the end of October, where they saw both an earnings and revenue beat and record free cash flow for the 4th consecutive quarter. Their third quarter earnings per share came in at $1.13, beating expectations by 12 cents per share, and revenue of $2.09 billion beat by about $200 million. The company said that they are well positioned to achieve their gold production and cost guidance. Recently, bumping up their price target on the stock was an analyst from Scotiabank. The firm said they adjusted their gold forecast for the next few years, reflecting their forecasts for interest rates, inflation, and US dollar expectations. And while the firm's long-term gold price forecast has not changed, they did make changes to their net asset values and target prices for stocks covered in the sector. Agnico Eagle has 11 current analyst ratings and almost comes in as unanimous strong buy, with 10 buys and just 1 hold. The average price target of $97 implies an upside potential of over 15%, and looking at those recent ratings down below, once again we have several analysts bumping up their price targets. Our high-end price target of $116 implies an upside of over 37%, while we do have our one hold rating on the low end at 85 for a pretty flat price target. Now we're going to take a quick look at a couple of popular gold mining ETFs. These are great if you're wanting to invest in this sector but want a bit more exposure and diversification than a single stock offers. We're going to start with the very first gold mining ETF launched in the United States. That is the VanEck Gold Mining ETF. It trades under the ticker GDX, currently priced just about $37 per share, and year to date it has climbed over 21%. It has an expense ratio of 0.51% and total assets under management of over $13 billion. The Gold Miners ETF tracks a market cap weighted index of gold mining firms, and it has 58 holdings altogether, with the top 10 making up 62% of the portfolio. Some of those names in the top 10 include Newmont Mining, Agnico Eagle, Barrick Gold, Wheaton Precious Metals, and more. When looking at the ratings on those 58 stocks within the ETF, overall we come out with a moderate buy and an average price target of over $47, implying an upside potential of nearly 26%. Down below you can see the stocks within the ETF with the highest upside potential along with the highest downside. And our second ETF is the iShares MSCI Global Gold Miners ETF. They trade under the ticker RING or RING, currently priced just above $30 per share. The ETF has gained over 27% year to date and has assets under management of $814 million and an expense ratio of 0.39%. And this ETF tracks the MSCI index of gold mining companies. They have just 40 holdings total, with the top percent making up 72%, and you'll see a lot of similar names here in the top few with Newmont Mining, Agnico Eagle, and Barrick Gold, but also a few different ones as well. And based on those 40 holdings, this ETF also comes in as a moderate buy, with an average price target of $38, implying an upside potential of 23.5%. And again, down below, we have the stocks here with the highest upside potential versus those with the biggest downside. So that is a quick look at two strong buy gold mining stocks, plus a couple gold mining ETFs as for a different way to invest in that sector. Let me know your thoughts on these companies and what other gold investments have you excited lately. I always love hearing from you guys. Of course, keep in mind these videos are never suggested to buy or sell any specific stock, so make sure you always stick to your own investing plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.